Hi everyone, and thanks for joining. Hopefully we will get some questions today. While we are waiting for more people to join, let's do a course review one more time. Let me see. Okay, quality of the picture is fine. What else have we got here? If you think your quality is not good, try to click on the widget on the YouTube and select higher quality of the video. It should be streamed at the 720p, which should be sufficient to watch on desktop monitor of some reasonable size, or maybe even on a pad. On the phone screen it might be too small. Okay, so let's go to the course presentation. Almost under any of my video you will find a set of links to join. Let me see. Here you can see this stream. So here is the widget with the quality. You can select 720p. And under the list in the description, you join the course via the form. You can select course playlist to play all existing videos of the course. You can go to course folder and see how things works around here. We have a homework folder, we have module 1, module 0, where we already did something. For homework, we will use only homework public folder. Now we are in the module 1, and today we will have these two lectures. To catch up, you need to review course schedule. And in the course schedule, you will find some pre-course material. You will find links to the kind of short videos, summarized videos with theory. Then you will find links to course materials, the ones which I prepared myself and the ones which we will use during the course. These are MIT OpenCourseWare lectures for accounting. It's MIT Sloan School of Management, very reputable school, Massachusetts Institute of Technology. And you will see here the links. Today we will work with this link, but that will be later on the second or even the third module. So you can catch up up to that point. On Wednesday we have Q&As for homework and other questions if you come up with any questions. And on Thursdays I'm currently giving homework and Q&A in Russian language. If you struggle, if your native language is Russian and you struggle with some learning accounting from scratch in English, you can join in Russian, and we will talk in Russian. And this is a plan for today. Here on the second tab in the schedule, I prepared a summary of different links. For example, it has links for today for module 1 with links to streams. I also send these links in Messenger and Telegram and by email, so you can join. Hopefully this will not complicate things. I want these streams to be later available, and I don't want to be to have like 1 4-hour stream. I would prefer to have several streams for like 1 hour or something like that. Also, today we will have breaks about 10 minutes between the streams to have some tea, coffee, and attend any other important matters. Okay, we got some viewers, so I'm switching back to the homework. Let's see what we have here. So stream quality is reasonable, 720p, not perfect, I would say, but it's pretty readable, and I will increase the zoom if needed. Let me know if you have any technical issues. I'm closing that, and I'm going. Yeah, if you missed the homework, you can do it later today. Right now we will be kind of doing it online. I will review other people's work, and in my course I am not punishing for what is called plagiarism. If you copy someone's work, I mean, you can copy it, but you need to copy it with kind of some mental processing of what you are copying. It is still a way to learn if you just follow how someone does something. So don't be afraid to look into someone else's file or in the my file if you are concerned in your accounting career. And it's similar to what like IT or software engineers do. They have a bunch of code pieces spread all over the place in the internet, and when they work on some task, they can just Google that task and they find out someone else's solution. And accountants work in the same way. We just, if we don't know the solution, we try to Google it and find it if anyone else has already solved it. Okay, so we go to homework public file. And in that file I found several prepared homework by other users. If you remember, we have, for the homework, it was lecture 2, slide 42. And we will go through the homework. Okay, this one is empty. Transaction list. Okay, Yelena S. So this was a homework by Yelena S. Okay, so we issued 50,000 shares of $10 per share. I need to adjust that, sorry. So we issued a natural quantity, just a quantity, 50,000, not $50,000. Okay, I will not. So just to avoid that mistake on the exams or such. Here we say that we issued $50,000. Sorry, 50,000 shares, and each share is worth $10. I don't know if Elena just decided to adjust the task a bit, or if it is a mistake. So if it's a mistake, then you kind of need to multiply 50,000 shares by $10, and you will get $500,000. I will change it here, but if Elena's intent was to keep it the other way, it's totally fine. Okay. What type of transaction do we have here? We have a transaction which is increase in asset and equity. Second question. We acquired a building costing $225,000 with a payment of $50,000 cash and assumption of a 20-year 8% mortgage. Let me do a bit of formatting here. Okay. So this is an asset acquired, let's say, asset acquired with cash and liability. So that is right. That is right. Land building, it's an asset, 225,000. Ideally, we would separate land and buildings into two separate accounts because land is not depreciated, building is depreciated. But for the purposes of that task, we can keep it that way. So the next point, cash. And here, okay, I see what it was. It was, it is linked to that column. So we would better just say that we have minus 50,000 here. The reason I fixed that to 500K is because we just got 50,000. If we just got 50,000K in the first task, and we already spent it for building, how would we spend cash for someone else, for something else? So yeah, we probably need to adjust that, just that our company will have enough cash to spend. Okay, so we acquired a building, we paid 50,000 cash, and we spent $175,000 on it. Building is an asset. Asset increases by debits. So that's right. Cash, we paid out cash. Cash decreased. Asset decreases by credit. That's right. And we also finance that asset with a mortgage. We finance the balance, the outstanding balance on that asset with a mortgage. And mortgage is a liability. And liability increases by credits. So that's presented correctly here. Task number 3. Purchased a used crane for 13,200 cash. What we have here? Asset for cash, which is also an asset. So we got a new asset, which should be debit because a new asset has increased in value, and we spent cash for it, which is a credit because cash is an asset and it decreased in value. We acquired raw materials for $8,600 on account. On account means that we have not paid cash yet. That's a bit a complicated question with some higher level of difficulty than usual. You need to know what means on account. And usually when we see on account, we need to use trade payable account. I will highlight it for Yelena so that she knows where I changed her file. Okay, so this was correct. Here I adjusted it for trade payables. So we will pay this guy later. But for now, we already got the supplies. So we need to recognize a liability in order to know that we already owe them this money because he provided us with supplies. He did his part of the contract. If your vendor does their part of the contract and you got what you had in the contract, you have to recognize a liability to that vendor. Okay, so we change that. Returned defective raw materials purchased in number 4 and costing 900 to the supplier. The account has not been paid. It's interesting that okay, Elena used accounts payable. So you can call it several different ways: vendor payable, trade payable, accounts payable. So I will just use the account which Elena used later in her task, which was accounts payable. So we returned the raw materials. Raw materials are assets. We decreased the value of our assets, so that should be credit. And we also decreased what we owe to the vendor. And that's why we should debit accounts payable. Accounts payable is a liability, so we debit it. Next one, we paid the supplier in 4 and 5 the amount due, less a 2% discount for prompt payment. The firm treats cash discount as a reduction in the acquisition cost of raw materials. Okay, that's interesting one. Very complicated. So we see that we owed these guys $7,700. So what do we have here? That's right, our accounts payable. That is reflected correctly. Our accounts payable decreased by $7,700. Now we got a 2% discount for that. So we need to put that amount somewhere. And that amount is 2%. Yeah, so that should be 2%. I think that's calculated correctly. I will just put in a formula here. 2% times. So by common sense, we know if we, so that was a liability, but what we owe, and we got a discount for it. So we would pay a bit less. So we would pay kind of 98%. 98% times that amount. And we need to credit, and the payment would be credit cash because we paid with cash. And we need to credit the difference somewhere, and the difference credited, as we have here in the task, the firm treats cash discount as a reduction in the acquisition cost of raw materials. Since we still have the raw materials on our balance sheet, we just credit supplies. So Elena used supplies account. Oh, sorry. Yeah, supplies. That's correct. Supplies account. I will highlight it here. A fire insurance policy. That task is a bit misleading because it has this 500,000 or 5 million here coverage, which will not be on our books. They are not giving us 5 million or $500,000. They only committed. To provide that amount of insurance if any event happened which will trigger the insurance payout. So that's why we do not reflect 5 million here. We will just reflect the prepayment. Prepaid insurance That's an asset. We can get future economic benefits from it. So it's a debit and cash is a credit. Hi Kat, I see your question. Will the stream be available to watch later? Yes, certainly it will be available. All my streams are available on YouTube channel, and I'm not going to hide them anytime soon, unless YouTube shuts it down for some reason, but I'm not breaking any known YouTube rules, so it should be available. It may take some time for YouTube to process the video, so it might not be available immediately after the stream, but it will show up pretty shortly, and you can find links to previous streams in the schedule. Thank you for joining the course. Okay, we did that one, and Yelena did that correctly. Issues a check for $1,800 for 3 months rent in advance for office space. Prepaid rent, cash, everything is straightforward, same as previous question. Done perfectly. Purchases a patent on a machine process for $90,000 cash. So patent is an asset, $90,000. Cash is a cash. We paid cash, credit $90,000. Everything is great. Next one. Purchases office equipment for $2,700, making a down payment of $250 and agreeing to pay the balance in 30 days. So equipment, the first part is equipment $2,700. Equipment debit $2,700. The second part is credit cash $250, and we need to put the difference somewhere, and that would be accounts payable, because we still owe money to that vendor, and that will be accounts payable. And the last one pays $825 to an express trucking company for delivery of the equipment purchased. That's also a tricky question, because common sense says to us that when we pay for trucking, for transportation, it feels like it should be an expense. But in accounting, sometimes is kind of different from common sense. So for that reason, there is an accounting standard which says that when we buy an equipment and we have some installation, delivery, and other costs related to bringing that equipment to working condition, we need to capitalize all those costs as a cost of fixed assets. So we capitalize that, and we obviously paid with cash, so we have a credit cash here. And the same situation works when we deliver inventory to our warehouse. If we pay separately for delivery of that inventory, we also need to capitalize it on the cost of inventory. I have to make a short note here. There is two kind of bases of accounting, or even three, or even four, depending how you look at it. The first one is accrual basis, and you use it most of the time. And accrual basis says that, okay, if we, for example, got inventories but haven't paid our vendor yet, our supplier yet, we recognize accounts payable. But if you work under the cash basis of accounting, that means that you recognize transactions only when cash payment happened. It works the same way with your revenue. So you recognize transactions the same way the cash moved between you and your vendor. We will look into that later today. But so far we assume that by the default we work under the accrual basis. But if you start working on some accounting project, on someone else's accounting, you need to figure out first what basis they have been working on previously, cash basis or accrual basis, and that can impact taxation. But the default mode for accounting is accrual basis, and US GAAP accounting assumes accrual basis. Let's move on. We are done with Yelena's homework, and there is also Maria homework. Let's see what we have here. 50,000 shares, $10 per share. Maria numbered her transactions, probably in order not to mess with trial balance functions. Let's see what we have here, and let me also do some formatting. No, I would probably leave it that way. Everyone can choose their own formatting. So first one, we got cash, we issued shares, debit cash asset 500,000, credit equity, equity is equity, 500 increases by $500,000. That's correct. Acquisition of the building, we assume that all of the amount is non-current. Somewhere next week I will do a video about mortgages, about current and non-current part of the mortgage, how to recognize it. But let's move on. So that one is right. I will not talk much about details again because we have just done so. So that's an asset, increase in asset is by debit. Cash and asset, decrease in cash is by credit. Mortgage is a liability, increase in liability is by credit. So negative amounts are kind of credits. That's another convention which I use here. So one is just do debits and credits by the same numbers, not negative. The other one is when you do credits negative. That one is more convenient for me because you see pretty much immediately if your entry balances, if your debits are equal your credits. So you just sum up the total and you see 0 here. So that way you see that your entry balances. Okay, next one, equipment for 13,200 cash. That's done right. Debit equipment, an asset increases. Credit cash, an asset decreases. Raw materials costing $8,600. Inventory merchandise, right. I would only add, I think I should a bit kind of fix it, because merchandise is supposed to be kind of ready to be sold stuff, like apparel or finished goods, and we have raw materials here, so we better just say raw material. Accounts payable, that's right, we haven't paid, we bought an account, so that's an accounts payable. Then inventory, again, we kind of switch back to that amount. It's not a big deal. We can have, theoretically, we can have one inventory account for every type of inventory. And if inventory is relatively small balance for our business, we can live with that. But in an ideal world, in an ideal accounting situation, we want to separate raw materials from finished goods. It can impact our accounting. For example, in some states, you might be taxed as on for a property taxes on raw materials, but you will not be taxed for property taxes for finished goods, and vice versa, because property tax laws in each state are complicated, and they might charge you depending on the situation. Okay, accounts payable. That's right, we reverse the accounts payable, so that will be a debit, a decrease in liability. We paid the supplier. That's right, we paid $7,700. I will highlight these three numbers. They all go to zero because we got accounts payable and we paid them. I will highlight it by yellow. That's how we got $7,700, which we settled. So that liability was settled. And it was settled with a asset outflow with cash, minus $7,546. And we got a discount, 2% discount, which is again, should be raw material. It's not a big deal, but to be kind of on a safe side, we better we better be as granular as possible and show as granular as much as we can the details of the accounts. Prepaid, insurance prepaid, $4,950. Debit, that's correct. Credit. So for insurance prepaid, I will not I will kind of highlight it in green. It's probably not that material as inventory. I would also advise you to have different prepaid accounts for different kind of prepaids. At least it will be much easier for you to reconcile later down the road. But it's up to you as an accountant how much details do you need. And let me leave a comment here. Comment. Preferably. It is preferred to have separate accounts for each type of prepaid. So you might have prepaids for insurances, prepaids for rents, you might have prepaids for vendors, and I would advise to have it on a separate account, just because that will make your life easier when you have to reconcile that account. For example, you find out that you have $10,000 in prepaids, and that's kind of some money. It's a good money for a small business, but you don't remember what prepaid was that. And if you have all the prepaid stuffed in the same place, and you have like 1,000 or hundreds of prepayments done over the course of several years, it will be hard to find which one was already settled and which one is still active. And by doing separate account for vendors, separate for prepaid insurance, separate for prepaid rent, it will be much easier for you to find what was the substance of that prepaid balance. Okay, let's move on. Purchased a patent. Debit, patent, asset, credit, cash, liability. Everything is great here. And office equipment with a down payment. Debit equipment $2,700, credit cash $2,500, credit accounts payable $2,450. That's right, everything balances to zero. we bought assets with cash down payment, and we paid accounts payable for the difference. Okay, let's move on. Cash paid. We paid for the express tracking. Since we paid for the asset, the accounting standards are different from common sense here. When we paid for the asset, for delivery of the asset to our of the equipment or property plant equipment to its operating site, and we paid some installation and delivery, this amount should be added to the cost of equipment here. And yeah, we paid with cash. And the same happens when we delivered supplies or raw materials or other inventories to the warehouse. Delivery costs are capitalized for in that situation. Okay, let me check if I've got. So we got Maria, we got Elena, and I assume that's Irene or maybe Irene. I'm sorry if I misspelled that. Yeah, we have one more homework to go through. It's 9:36, and when we're done with that, we will have a break before the next lecture. We have several people here. If you got any questions at the end of the day, this is a Q&A session. If you got any questions, you can post them here, or you can go to Q&A file, which is in the course folder, and ask a question here. I did okay, I actually got a question, and I will answer that after the homework. Okay, where we have Irene. I assume that's Irene, but probably that's Irene. 50,000 shares at $10 par value, 500 cash, 500 equity. Everything is right here. Land and building 225,000 with the cash and assumption of the mortgage. That part is also right, and you see we separated land from the building here. There was no requirement to do that in the task, and there is no clues how to determine the land value. But in accounting, you need to show these separately, unless your land is or your building is kind of very cheap to separate, like insignificant, immaterial. So if something of that would cost like, I don't know, $3,000, you can probably show them, like, depending on your company's accounting policy, you can show that as one item. But usually land or building still has a significant value. So as we see here, we separated based on our judgment. We separated the land. That is kind of a canonic way to do that. Purchased a used crane for $13,200. Debit asset $13,200, credit cash. Asset increased in value, paid with cash. As straightforward as it can be. Acquire raw materials for $8,600. Again, because I changed it for the previous homework, I will change it too. Let's just let's just try to be more or less detailed here, and I will have to change it throughout. It's not a big, it's kind of not a big mistake, but later in your career you probably want to be as detailed as possible. With that kind of stuff. I would assume if you do that for that course here, if you just say the inventory, that will work. If you do like an exam with MIT and you just say inventory, that will probably work. But in accounting, merchandise and raw materials are kind of a different items. Okay, so we got on accounts payable, on accounts payable, okay, and we returned defective, that decreased our accounts payable. So then we settled the accounts payable, and I will again highlight, so that's equals to 0. And let me show that's where we got that. We paid 98%, so we got 2% discount, so 98% we paid with cash. The other, as stated in the problem, we reduced the acquisition price for raw materials. So that's done right. And we have 2 prepayments. Again, I would advise to have prepayments on a separate account, various types of prepayments on a separate accounts. That way it will just make our life easier further down the road. Not on that course, I mean our life in accounting profession. Cash, that's great. Acquisition of a patent, 90,000. 90,000. That's right. Acquired equipment with a cash down payment. Equipment assets increased, debit 2,700. Accounts payable. So that's right. And the last one is right too. We capitalize. So if we paid for transportation of equipment to our operation site, or if we paid for transportation of our raw materials to warehouse where we store them, we need to capitalize to add the amount spent to the value of that equipment or raw materials or merchandise or other type of inventory. Okay, so I think we did 3 homeworks. These ones were not finished, so I will not go through them. And I've got a Q&A question here. It's in Russian, so I will translate that. Could you please advise if trial balance and accounting equation from transaction list? So the question is, if we have a ready template for trial balance and accounting equation exercise, or if we do that separately in each document. And the answer is that the idea of the course is that you will do that with I will do that in my file, and you will repeat that in your file. And that way you will learn some formulas and you will practice the concepts more. So let's go to Maria's file and let's see, do we have anything in accounting equation? Not yet. So how do we deal with that? We go to my file, to template, the one which has copy me here. And you go to accounting equation list. And you just select 3 lines, copy them, and okay, let's go to everyone's list. Okay, it already copied here. Yeah. Okay. And you do that for yourself up to the point where you understand that you kind of understand the concept. You don't need to do that for every transaction. So on your sheet, you just, if you already got the concept, you don't even need to practice that. So let's go and let's start with the homework. So here was the acquisition of the shares. You will have to do a bit of a formatting here. So we acquired shares, so we got cash from the transaction list, 500,000, and on the other side we got equity, 500,000 with a minus sign. So you done that, you can go to the second task, which is building. We will only do 2 here. So for the building, first we acquired some building and land. Okay, then we spent some cash on it. And at the end, we assumed a mortgage on the rest of the value of the building. So you do that until it kind of your brain start working in the accounting way, just recognizing that your assets, what you have in your assets should equal what you have in your liabilities plus equity. And that should be true for every transaction. Let's see, the third transaction was just in the within the asset group. So let's get it here. We purchased a used crane, so we paid for it with cash. And we got some equipment. Transaction list, equipment. So you see in that transaction, we do not have impacts on equity or liabilities, but the equation still works because 0 is equal to 0. And same way, let me use someone else's account. So that is Yelena's account. Okay, that way you also try to fix your balance sheet. Your trial balance first. We will move to the balance sheet further. For example, as you see, we have a kind of a problem here, so it doesn't balance. I advise to highlight by red that amount. So in that balance, we need to figure out what assets are not on our trial balance, what accounts are not on our trial balance, why our debits and credits do not match. And the easiest way to do that is to use the lookup function. So you can do it manually by reviewing, but we also can do the lookup function. And what we do, we just use the lookup, and we go to we search for account name, and then we go to trial balance and look up for the total If you learned VLOOKUP function, it will be easier for you. I have a separate video about VLOOKUP, or you can Google how it works. So basically it searches in the first column. It will search for a term in the search for first column and then provide the value in the column number which you gave it. In our case, it will be number 4. And at the end, we just put 0 by default. We do not need to overcomplicate it. Let's see. Let me just. Okay, I should have used 3. I should have used 3 here. And you see, it looked up the cache amount. I need to save some place here. So we look up for the cache word and it worked. Okay, let's see if I will get. I'll obviously not get. And then I just copy that to every account. Okay, so mortgage is not yet here, but let me just fix that. Okay, so that lang/building is not in our trial balance. So what do we do with that? We just go to our trial balance. Though we already have kind of a buildings here, we just move everything a bit lower. We add that account here. And we copy SUMIF function from here. And now if we go back to transaction list, we will see that we now have that account here. Okay, we also got mortgages payable account here. We can call it that way, but usually when we use payable, I haven't seen a term payable used with mortgages frequently, but let's assume that these are two different mortgages with the previous one and we want to show them separately for some reason. So we can go here and let's assume mortgage payable is non-current. And we just take mortgage payable from here and we copy the SUMIF formula. From here. We still have 100,000 differences. Let's move on. Oh, we are running out of time for the lecture. Okay. As you can see, we have quite a few accounts which are not on our trial balance. So all of these need to be fixed, and we will do that in one of our later practice sessions. And one of our future homeworks will be maintaining your trial balance so that it matches. And let me send you a link for the next stream. I will take a 5-minute break and let's meet in 5 minutes. if you got any questions, you can post them to the Q&A file. But the answer is you will have to work on your trial balance and other forms of financial statements like balance sheet and income statement. You will build them from scratch just by repeating what I'm doing in my file. And then I will review that on the homework, and I will fix it like on the stream. And that way, hopefully, we will learn how financial statements are made, like main forms of financial statements. You also have notes to financial statements, and we will not be covering that in the course because it's like it's a couple of years of real accounting experience of 2,000 or more hours per year to learn how to make notes, all the notes to financial statements. But we will build the main financial statements. Okay, let's see. So if you go to the schedule or to any chat, let's see here. Okay, in the Telegram chat, the next module is on soft skills, about the benefits of accounting and about memorization technique to use to learn by heart what like a lists of assets or liabilities or equity. Okay, and I'm sending this to everyone. I'm sending this to this chat. And I'm sending it to Messenger chat. And I will be ending that stream right now. And if you got any additional question, you will have to either put them in the document or ask them on some other Q&A session. Thank you for coming, and let's see each one in 5 minutes.